What's up, my future one percenters? This is the Trader Champ Cam Jones, and I want to start this off by saying I'm not a professional trader, and everything on this channel is strictly my opinion. I'm not telling you to do what I do, I'm just telling you what I'm doing. This channel is also brought to you by TraderChamp, a one-day fantasy stock trading application. You can challenge different traders from around the world in a one-day fantasy contest to see whose portfolio is better, and you can come out being a trader champ. It's also brought to you by Montre, augmented reality app that you can download in the App Store. Um, you can share media to different locations around the world for other people to see. Sorry, you can also rent digital spaces and virtual reality, so you can control um, what's being seen in that area and things like that. So with that being said, let's get into it. I haven't made a video in a while, as you can see. um, we're just getting over something, but the cough still lingers a little bit, so hopefully that's the last time I cough on this video. But I did want to make this video real bad. Today is February 28th, 2025. Everyone all knows what's happening today. It was the Ukraine and United States. They kind of tried to make a deal to end the war, and we all know what happened there. And some of this stuff, it affects the stock market, and it's just real interesting to see how this stuff is playing out. And I also wanted to show you how charts look when the market isn't just always going up. You can see what charts look like when things are looking bad in the market, because it's February 28th, the last day of February, and basically the whole month of February the market has been kind of down a little bit, so you can see how things start to look. And what we're going to do today is something a little bit different. I'm going to use the Apple Vision Pro to look at some stock charts. I'm calling it Touch the Charts. So we're about to touch the chart right now, and we'll see how this goes. All right. So right now we are looking at Netflix, but I do want to pull this a little bit forward. First, let's take a look at the NASDAQ. So this is the NASDAQ, and you can see the chart here. You know how I like to set up my charts. The red line is always the 20-day moving average. The blue line is always the 50-day moving average. And the green line is always the 200-day moving average. And you can see, things start to drop right here. And it hit that 200-day moving average actually today and bounced off of it. That's actually a good sign, because that means that it's fighting it off. So it's a good buying opportunity right here. I wouldn't throw like everything you have in the market, but it's good today and maybe Monday next week to hop in a few stocks that maybe you don't own that you want to get into, or maybe you don't own enough of. You can see it's had a rough, 1, 2, 3, 4, 5, basically a rough week and a half. I mean, this thing has been flying out. Look at these big red candles right here. And when you have, a 1% down day in the stock market, um, that really affects individual stocks a lot. A 1% day in the overall market, that can move some stocks, 20%, one day, 10% one day. As you can see on some of these things that I'm going to show you, especially Tesla, if we take a look at Tesla. But you can see, before I hop off of this NASDAQ chart, you can see here, I mean, it's been just a nice little ride up all year, all-time highs. It's been hitting, and then, like I said, about a week and a half ago, kind of um, corrected itself a little bit. And then how I like to look at my charts, if things go up too high above the 20-day moving average, that's when I start to get cautious. So you can see things like right here came up way too high above the 20-day moving average, came back down right here, way above it. Here too, a little bit, but you can really see it right here. It was just too hot. But now, as you can see it fighting off that 200-day moving average, it may be a good time to hop in some stuff, but not get cute with your stock picks. You want to hop in some things that you know is going to go back up around the same pace as they went down. So maybe a Tesla, Netflix, Amazon. Apple didn't really go down that much. It's still, their all-time high is 260. They're sitting over here at about 241, as you can see right here, 241. So that's not that much of a drop. But let's take a look at Tesla. Godzilla. There we go. So look at Tesla. It's starting to be an ugly chart right here. You can see right here, it look real nice. Right after election time, took off. And now it's cooling off. It cooled off a lot. And actually, I was going to make a video on Monday. Monday was probably about right here. Monday or Tuesday, one of those days. It may have been Tuesday. I mean, it went down. That was like a 24% drop or something like that. It went down and came down below 300. And I thought that, hey, this going below 300, that might be a good time to pick some up. So I picked some up at like 298.60. And as you can see, this thing still kept going down. Today, it went down below the 200-day moving average, but it fought back up and came up. Where's it at? 294.40. So that was a nice come up, nice fight back there. Tesla is one that you probably want to hop in. I wouldn't throw everything at it. I would just dip in here and there. It happens. 7 days. I mean, that was an aggressive move down. So it may have a nice aggressive move up. You can make maybe 5 to 10% in a matter of a week and a half, something like that. That's pretty good considering that savings accounts, they're paying the highest savings accounts paying about 4% a year. So if you can get 5 to 10% in a matter of days, that's excellent. You take a look at this gap right here. That gap is all the way down to 250. So that's below the 200-day moving average, but it looks like it's fighting it back up. But let's take a look at another one my boy sent to me. He wanted to, and that is first. Look at this. This is an ugly chart. This is just nasty, terrible, just straight dastardly. This is awful. When the market is going up to all-time highs, if the stock isn't going up to all-time highs, that's a problem, or at least going up with it. Let's take a look at this area around here. This is that election area when the market started to fly up. Now, if you remember just a few minutes ago, I had up the NASDAQ chart. You up and make a comeback, but it's just, is it worth it? There's other things out there to put your money in. It's at $136 a share right now. That's just awful. Look at this. just straight down, even when the market was making all-time highs. And then now that the market is kind of going down a little bit, it's just adding to that downward pressure. You'll see these things just keep going down, like, it doesn't end, it seems like. This is a stock that you buy with change. What I mean is, let's say you have $5,000 to spend in the stock market right now. Let's say you want to get maybe $2,000 of Tesla, $2,500 of Netflix, right? And then you have $500 left. And you may throw the $500 at this. That's the change left over a little bit, if you want to take a risk. But right now, it's not really time to get cute because there's too many better deals out there on the bigger stocks that usually, are that not usually up, but that are in like a nice uptrend, like an Apple or Amazon, something like that. So it's not time to get cute with some of these stocks. Stick with the ones that have been constantly going up. I know getting cute with some of the stocks, you can make a lot of money, but the risk is too high right now to throw a lot of money at. Now, you want to throw like the change that you have left over at it. Okay, cool. But I wouldn't be, if I had 5,000, it's not like I wouldn't put like 4,000 into this. I probably wouldn't even put 1,000 into something like this. Look at this chart. Beautiful. Beautiful. Even here, a little bit of a downtrend with the market, but as the market's going up, this is going up. This is making all-time highs. As the market is making all-time highs, this is kind of the stuff that you want to see. So when you see things start to drop, stocks like this start to drop a little bit, look how far it is still above the 200-day moving average. This has a little gap fill right here, somewhere around maybe 920, something like that. It's 980. I'm thinking, here is a nice spot to go to get into. Look at this right here. A little bit of support right there. And if that doesn't hold, you can dip in around that $900 area. It could go as far below as about 850 around right here. I really don't see it doing that, but it could. But this is one that you want to get in when the market is down. You want to say, let me get into a Netflix, because just overall, just look at the chart going up. Compare this one to the last chart I showed you, First Solar. It was doing the exact opposite. Look at this. This is going straight up. First Solar was going like this, And I'm not saying you can't make money on First Solar, because you can. It's just, where do you want to put your risk reward? Do I want to risk a lot of money on something that's going like this? Or do I want to risk the money with something that's going more like this, that's moving up on the uptrend? And I want to get something like a Netflix, something that's going to be around for a while. It still has room for growth. We talked about that on another video. First Solar, that's a lotto. You hoping and praying with that one. That's a falling knife right now. So I would I would definitely mess with something like a Netflix, Tesla, Amazon, Microsoft, looking at some even Nvidia, even though Nvidia is getting hit a little bit, but that's a little better than First Solar. But like I said, you can still make money on First Solar. And shout out to my boy who sent that to me. I don't mean to say something bad about his stock pick, but it's just, to me, there's better plays out there, better places to put my money than a First Solar. What's another one that we can look at real quick? Last one. Let's take a look at Amazon. Amazon, another one. It's not as nice as Netflix, but it's still going up. You see it's starting to feel a little bit of pressure right there. But Amazon's not going anywhere. This is one that you probably want to get into. All-time high, 242. It's down here at $212. If it gets below that 200-day moving average, below $200, to me, you got to get it. You got to pick up Amazon under $200. this would be a nice investment, nice place to put your money. You can see where it's, again, the upward trend, real nice. I wouldn't be messing with something that's going down. The trend is going down, especially when the stock market was hitting all-time highs. This is another one. As the market was going up, Amazon was going up with it. Whereas something like a First Solar, the market was going up, the First Solar was going down. So ugly chart, First Solar. This one, Amazon, not beautiful, but it looks good. It's solid. So that's that. Basically, the moral of this video is don't get cute with your stock picks when there's, some nice deals out there. Stick with the ones that are going up. Check out the stock chart. Look at the trend going up. Right now, I'm sticking with the Netflixes, Amazons, Teslas. Tesla's probably the only semi-risky one here just because of what's going on with Elon Musk and things like that. And also, electric car sales have been declining overseas a little bit. So Tesla's a little bit risky, but I would trust Tesla over some of these other riskier ones. So let me get these things off. I do want to say that, everything going on right now, pay attention to that stuff like in the news because, you could take advantage of some things like some one day spikes down just because, something didn't go the United States way or something didn't go someone else's way. You could use that to your advantage and, a stock may have dropped 10% in a day because of some news and that doesn't have anything to do with the fundamentals of the company, and you could just pick that up on a steal, and then the next day or next 2 days, it's right back up. So that's it for me, y'all. Peace.